companies. And so we're going to get this conversation started. We're here talking about an economic outlook for growth companies. So when the world changes and the economy stops, how much should growth companies change? How different does the world look now? And what are lessons for always? We are going to be hearing from three awesome panelists. We have Mike Vaughan, who's the former COO of Venmo and now the executive in residence at Oak HCFT. We have Rick Nucci, who's the co-founder and CEO of Guru, which makes a knowledge management platform. And we have Rakia Reynolds, who's the founder and CEO of Skai Blue Media, a communications firm. So they all happen to be based in the Philadelphia area. That it was not necessarily by design, but we are very glad to have you all here talking about these issues that are impacting people all over the country. Attendees, you might see a poll pop up in a second. So when that does come up, take a couple seconds to fill that out. You can use the Zoom Q&A function throughout. After the panel, we're going to have a 10-minute break. These sessions are being recorded. We're going to do some recaps on Technically. And this is our first virtual conference. This is the first time we're using Zoom this intensely. So you can give us some feedback afterwards. Yeah. Oh, and here is our poll. So attendees, take a second to fill that out. When are you planning for economic growth to return to the United States? A great question. So in the meantime, panelists, thank you all for joining. Excited to have you. I want to, first of all, I would love to hear a little bit more about your work. If you could tell everyone what your company does, and also share what's an assumption that you had in February that you have thrown away, that is just not relevant, something that you thought was going to happen this year, and then a pandemic hit and you had to change everything. So Rakia, I'm seeing you on my screen. Do you want to get started?
Sure. So my name is Rakia Reynolds. I am the founder and CEO of Skai Blue Media. We are a multimedia communications agency, and we break our work up into people, products, and places. So on the people side, it's all about storytelling, online reputation management, digital communication strategies. On the product side, we deal with influencer engagement and storytelling. And on the place side, we recently worked with the city of Philadelphia on the Global Identity Project. And before that, we were working with cities like Memphis, Tennessee, working with Visit Philadelphia on multicultural campaigns for the Black traveler. So we've done a lot in the world of storytelling and communications. And I would say, to answer the second question, what's one thing we sort of threw away, as comms people, and sometimes, having a little bit of a mind of a futurist, I was planning all of these things, right? Like planning for my family. I have a child that's going to college next year. We were looking at opening up an LA office. So one goal was to double our revenues. It was and we were on track to double our revenues. We had done all of this planning. I was spending more time in LA, looking at hiring new people. And around January, things started to change. And then obviously February, and then we were working on things for South by Southwest. And then that was the telltale, okay, we're here.
Yeah. Moment. Yeah, thank you. Rick or Mike, you want to jump in?
Sure. Hey, everyone, I'm Rick. I fixed my name, so I'm now showing properly as Rick, co-founder and CEO of Guru. So Guru is started here in Philadelphia back in 2014, and we provide knowledge management software. And what that simply means is a product that helps teams stay connected internally. So all the knowledge that you need to do your job is accessible in Guru. We make sure that knowledge doesn't go stale. We work with teams from 20 all the way up to thousands in size. And so for us, so we sell a software as a service. And I think probably the stuff we threw out was, our hiring plan, our revenue plan, our capital strategy. We did end up raising, but all of those things changed. I can definitely, elaborate on all those and how we've kind of changed. But, really, I would say that to summarize the thinking, really kind of reset how we were going to think about both, how we spent capital as well as how we thought about ramping the business. That all changed, I would say, very significantly over the last yeah, month or two.
Yeah, got it. Thanks, Rick. And context for everyone else watching, Guru raised a $30 million round in April, I guess, right?
Yes.
Yeah,
Yep.
great.
That's awesome.
Yeah. And Mike, let's hear from you.
Yeah, Mike Vaughan. I am currently doing an executive in residence role at Oak HCFT. As Julie mentioned, it's a growth stage healthcare fintech fund based in, work with a team up in New York. We have people out in San Francisco as well and Boston. Prior to that, what I'm better known for is 8 years at Venmo from early days, 5 or 6 guys in an apartment in Philly through in 2011 through actually raised money from Excel, who Rick just raised money from as well, and had them as a partner. Sold to Braintree in 2012, sold to PayPal in 2013. It was part of eBay. We split from eBay in 2015. And I was there through May of last year. So it's been a year since I was there. When I left, we were 40 million something users and $100 billion a year in payment volume running through Venmo. So quite a run. And over the last year with Oak and on my own, been doing a bunch of investing, advising, working with, at this point, I counted up 30 plus companies with Oak and 30 plus companies on my own in some advisor, investor, board member capacity. So I'm seeing a broad sort of spectrum of, everything from working with a lot of seed stage, pre-seed companies where it's idea phase all the way through some of Oak's companies that are more, much further along in growth stage. What I've thrown out the assumption of is I'll be able to go meet teams in person. Last year I traveled more than I had ever in the last 12 months, more than I had ever done when I was in a traditional operator kind of role. And that was to go meet teams, meet founders, and not just in the U.S., all over the globe, and that's now not happening. And I don't know when that's going to return. And people are having to adjust to it, particularly in the venture space. And there are a lot of deals that are getting done now, like Rick's deal, where there's existing relationships, which is a little easier. I think, if this, which I expect it will, goes on for another 6+ months or longer, there's going to need to be deals getting done. If they're going to get done, they have to get done with people who haven't met each other in person. And that's really hard, particularly in the venture space, and going to take a lot of adjustment. And I'm involved in one seed deal that is getting done start to finish all over virtual, and the investment partner and the founders have not met each other in person. So it can happen. It will need to happen more. And for me personally, having to adjust to that, where how do you build relationships with folks when you're not meeting in person and doing it all over a computer screen?
Yeah, thanks, Mike. I want to shout out that we have about 200 participants watching right now, and we also have this Q&A function. And in the chat, we just got the comment from someone named Michael Adler. I could not imagine life in this pandemic without Venmo to keep payments going for me, my friends, and my clients. So thank you, Mike, for your work.
Shout out.
Yeah. Let's can we see those poll results? There we go. All right. So people are a mixed bag of optimism here. When are you planning for economic growth to return to the U.S.? Slight winner is Q1 2021.
That was my vote. It wouldn't let me vote because we're in the panel, but that's the one I would have picked as well.
Yeah, and then we have let's see, about 40% of people say either longer still or uncertain, and then the other 40 or so are shorter. So that's interesting. Thank you all. All right. So for each of you leading your companies, what are some of the macroeconomic factors that you are paying attention to, or the ones that are worth paying attention to, and the ones that you just need to ignore because it's not relevant to you, or you need to focus on something else? So that could, international politics, unemployment rates.
I mean, I can tell you one of the things I've been spending. I think one of the big questions is how much of what's happening is a permanent shift, and how much of it is a temporary shift. How much? I'm not in an operator role today, but I am spending a lot of time with teams at various stages, and particularly earlier stage stuff. But seeing companies doing everything from tune it out, put your head down. If they were fortunate to not get hit squarely in the mouth by this pandemic, like somebody like a Toast in the restaurant business was, maybe put your head down and get to work and come out the other side and hope things clear up, to seeing companies that completely pivoted their business. There was one company that was supplier to restaurants, completely pivoted to direct to consumer model, and then raised money on the new business all in the last 60 days. Right. And completely changed. It may never go back to the old model. I don't know, like that'll depend. And so that kind of question of like, do you react? Do you adjust your business temporarily to help out? Do you adjust your business temporarily because it's an opportunity and you can meet that? Or do you, or is this something that, you don't want to react too quickly to, and you want to sort of stay focused on your longer term plan if you have the resources and you can weather the storm? And I think those are tough decisions because of the uncertainty, and particularly if you were directly impacted by this, like somebody who is supplying to restaurants, the revenue goes to zero. I think there's a lot that we've never seen before happening right now. And that's one of those where it's just like the uncertainty is at a level that is has never happened in our lifetime that to speak of.
Mm-hmm.
I would couple thoughts of how we're thinking about it. I think I'll start with the things that I don't pay attention to, maybe, which would be trying to plan the business based on when the economy will recover. I guess just as a macro statement, I think that it's so unknowable, and I find myself trying to balance between playing offense and playing defense. And I think that one of the traps I have fallen into is I can pick my head up and go, man, I just played defense for like a long period of time and didn't actually, focus on the things that were in my control. And so kind of tune a good amount of that out. Now, there are definitely things that we do control that are very specific and influenced by the economy. And so, two examples of that I would share that we're doing right now. The first is industry, refined industry focus. And so I think we have immediately shifted the types of businesses that we do and won't focus on based on how they've been impacted by what's going on. So that's been a fairly significant change in how we've defined like industry targets that we focus on as a business. And then the second one that we have changed is our go-to-market. And I would say maybe not change as much as doubling down, but like one thing I think we've noticed and heard is the efficacy of like outbound sales and tactics around trying to do outbound calls and emails, I think has just gotten a lot harder lately. And I think one of the reasons for that is I think it's just gotten really noisy. And I think that I've noticed personally, like my volume of inbound, of people prospecting has gotten way louder from a volume perspective, but kind of like the offers aren't necessarily different or interesting or unique or personalized. And so we had launched this like a freemium strategy, which a lot of SaaS companies do, and we had launched ours in January of this year, and it was sort of pretty quickly positively impactful. And I think we've made a decision as a company to really double down on that. And I think that's really a result in us going, okay, I think the way that people buy software is likely going to change, maybe for a long time, but definitely for 2020. And so let's sort of double down on this thing that we felt was kind of already showing signs of success, but really unify the whole company's focus there. And so I think that's been the right move. It's kind of early in that for us, but I think it's a good example of us sort of going, okay, we've seen this, like this macro force, which feels hard to follow too much, but very specifically, like feels like the way people buy is going to change. And so let's sort of adapt to that as a company. And in many ways, I like how things feel just a little simpler now in terms of how we talk about our business and how we go to market, because everyone's kind of thinking about it the same way.
Yeah, I like that you said that. One thing just to add in there, I think at the macro level, because we're a communications agency, we've been paying attention to, I wouldn't say all of it, but we have to, for us, it's the consumer behavior side of things. We're dealing with a lot of consumer focused companies, and we deal heavily on the messaging side. So as you can imagine, looking at unemployment rates, we don't want our clients going out with messages to buy something or to do something. For our clients, we've been really reinforcing this fact of like adding value to what you do right now and building community. So it's value over selling. And one of the things that we've been saying is, you have to have, instead of, putting out advertising, saying like, push this here, it's more of a message of join us. I have to be honest, in the economic downturn of 2008, I was one of those people that was laid off. So just understanding and having the level of empathy of being in the shoes of the folks that are being laid off, my lens has been a little different with this pandemic. Obviously, it's not like, people are saying it's the last economic recession. It is not. We are going through a pandemic. So people are at home, as a mother, I'm like, here with my kids, having to use certain messages with them. And then with our clients, and we work with really large companies, nonprofits, Fortune 100 companies. For us, it's paying attention to all of the macro trends. And again, it's not saying don't look at this or don't look at this. Pay attention to all of it, because at some level, it is going to impact your community, or it's going to impact your consumer. So we need to be very, very, very diligent in paying attention to the business cycles, the unemployment rates, the trajectory of businesses, things that people are doing. So from a consumer behavior standpoint, we're spending more time on the behavior side right now, looking at how folks are consuming over just like, okay, what are the numbers? Because we have to deal at a level of empathy.
Yeah, that's really interesting, Rakia, and that reminds me of something that you were talking about earlier about your changing revenue expectations. You had expected to double revenue this year. So for each of you, I'm wondering how do you strike a balance between being realistic and being unambitious in resetting revenue and benchmarking targets? Because, according to our poll, we're not sure when the economy is going to reset. And as we've all been speaking to already, we can't assume anything. So you need to forge forward as best as makes sense for your company. So how are you rethinking those revenue targets and benchmarking?
Yeah, I'm happy to share how we've just done it at Guru. I think for us, the approach was like kind of like a capital strategy, centered around a capital strategy. And so I think we did sort of, when, your first question, like the things we like threw out, I said a whole bunch of like big things, but like, we did redo our revenue plan. We did redo our headcount plan. We did redo our like capital like burn strategy. And like, I think we've always been of the mindset as a company that's like raised venture capital to be mindful of burn. So I don't think we were like doing anything outrageous by any means, but the approach going into the revenue replan, like, I think the hard part about it is it's like what I was just saying before, like it's like unknowable, like it's like almost academic, right? And so I think rather than trying to wrap our heads around like, oh, well, this industry might do that and that might do that, our approach was like, okay, let's assume that new business growth will slow. Let's assume that existing customers will churn more or contract more due to, tragic reasons like layoffs, or, they're in an industry that's a direct impact, like the examples Mike was giving. I really loved the focus on empathy that Rakia was talking about. I think both in the offers you're making to customers, I think also with our existing customers, we've really focused hard on that, and are we're emailing customers, and some of those emails are bouncing back because the people we were working with had been laid off. I mean, it's obviously not great. And so we've focused on trying to, some of the very specific ways we've tried to demonstrate empathy is customers that are facing financial hardship, helping them out with their bills, and just sort of almost, preemptively offering that in situations where that's happening. I think those types of things demonstrate a long-term partnership, and I think it's been well received by customers that we're just, at least we can do is kind of take that concern away for at least a period of time. The other one is just trying to be more hands-on as a customer success organization, and trying to offer more help, more heavy lifting, more of the work if they're, migrating a knowledge base over to Guru or something like that, right? And again, that's really in response to, hey, my team just got smaller by 20%, so I don't have as many humans to actually do this work before, right? So I think we're trying to do things. So I think what those things lead to is an expectation of okay, we probably will see some greater churn than we might have seen before, or contraction we might have seen before, and then slow down in new business is reflective of companies putting freezes on tool spend across the board, or companies going, we're going to have to prioritize, this area of the business instead, and having to make a current shift. Again, no idea if any of that'll happen. Like very much of what I just described was because it was actually happening to Guru, but I think we made the choice of well, let's just plan as if it's going to. And then what that really just amounted to was a set of leading indicator metrics that would be the reason we would hire, or the reason we would spend more in this area. And so it just sort of refocused us into a different way of managing the business and how we decide to grow. And so leading indicators for us is how many new accounts are getting created every day in Guru. And so we set goals and targets around that. And then based on hitting those goals and targets, that would trigger, hiring in these areas, hiring in those areas. Based on those churn numbers, that would trigger hiring in customer success organization. So we basically just recalibrated the way we decide to spend money as a company. And so that means that it could be, in a quarter, we're ramping up our hiring the way we thought we would coming into the year, or it could mean we're doing that in a year from now, right? But I think the point is that's just how we've aligned with the team internally and the board. And I think that alignment now is, based on metrics that we can control or understand, versus it being something that feels abstract.
Cool, thanks, Rick. And Rakia, just because you were the one who brought up revenue, anything else you want to add to that question?
Sure. I mean, there are a lot of things. So one thing that I was working on, I partnered up with a data scientist about 3 years ago, found another, I think my camera might be going in and out. My dog's running around, so he may have moved something. Partnered with a data scientist, and in January, we were on track to start another arm of Skai Blue Media that focused on business and branding, and building for business and branding with a predictive analytics lens. So how do you, from a small business standpoint, how do you predict risk? And so we were working on all of that, and then this happened. So we were creating another extension of our business that would make it accessible for small businesses. And let me see if I can change my camera here, because hold on one second. Okay, there we go. I just changed it. That's the other camera. But we're taking.
Hey, Rakia, your audio is a little off now. Do you want to go mute for a second, then come back on?
Oh, okay, hold on. How's that?
That's great. Thank you.
Okay. So one of the things that we were doing in terms of this sort of way to work with predictive analytics for small businesses to help assume or, work on risk and work on your brand with risk in mind, we kind of had to throw that all away because of the impact of small businesses. So what we're doing now is we restructured the way that we're working with a lot of clients. I have a background in crisis communication. So as you can imagine, a lot of the companies that we were working with doing, sort of light campaigns and, finding out what your identity is, turned into more of crisis, triage, future and recovery communications. So at the onset of this, we were, working around the clock on crisis communications plans in the people space. So all of the celebrities and C-suite executives that we work with, what are the messages that you're putting out to your fans and followers? What are the messages that you're putting out internally to your company? How do you put out a message if you have to furlough or lay people off and you don't want that to get out externally, to not shake other people or to not shake that industry? So we were doing a lot of that kind of work in the very beginning. And then we started to ease into, okay, we've got the crisis down. Now we've got to get into the triage piece of what we're doing. And so we're right in the middle now of triage and future and recovery with the small businesses that we work with the large institutions that we work with, and some of the celebrities and C-suite executives that we work with. So we had to quickly adapt. And when I say quickly adapt, we had to adapt in a matter of 48 hours, and making sure that we were servicing the people that are on our client roster, and giving them more value than we had in the past in a different capacity.
Great, thank you. Mike, something that you mentioned earlier, you said you use the word opportunities. So I'm thinking about how growth companies can either capitalize on this moment of economic change, but perhaps hopefully not take advantage of terrible circumstances that people are in. So is there a difference in how do you balance that? So like the Warren Buffett saying, be greedy when others are fearful comes to mind. That's something that Chris Wing says to me all the time. So Mike, maybe you can take that one. So how do you balance opportunities versus not taking advantage of people?
Yeah, I mean, I think you can take advantage of opportunities, and it's not necessarily taking advantage of people. And I think, you see everybody from Amazon to at the big end down to, early stage startups having to navigate this. Like, is it okay to make money on this? And what do you do? And how do you support it? And Amazon's donating a bunch of money, and they'll never, they won't ever be not scrutinized for every move they make just because of how big they are and how much impact they have. But they are trying to navigate similar questions, right? Like, how do we make sure we're doing the right things and supporting our employees and our customers and our team and their families. And I think, one good area is you look at, particularly when you're dealing with venture portfolios, but even more broadly, there's a lot of really good people that are going to be out of work. And when you see companies laying off half their workforce, like Toast did, or Uber or Airbnb laying off 25% of their workforce, that can't just be, dead weight, right? Like, there has to be a lot of good people in that. And in some cases, it's entire divisions where they're just not focused on, like Airbnb said, where they're just not focused on experiences anymore, and they got to refocus on sort of the core business for when travel does come back. And there are opportunities for people to get good talent. There are opportunities for startups to raise money at good terms right now. There's a lot of capital out there. There are going to be the bar is much higher. There's going to be a lot fewer rounds getting done, but I think it's a little bit of like the separation of the good from the great, where it's going to be harder to get funding done because the bar is going to be a little higher, and there are a lot of funds that are on the sidelines right now. And have more trouble investing in companies if they don't meet them in person, or have more trouble with the portfolio because they, a lot more of their companies were affected by this more directly. But in the cases where, companies are getting funding, they actually stand out a little easier right now because there's less companies trying to raise, and they may actually end up getting better terms. And you see a lot of really, even at the high end, where some of these massive, Robinhood just raised and others are raising, where they're getting deals done and valuations are going up because they're benefiting. Robinhood's benefiting, just like PayPal and a lot of the other sort of online brokerage apps are and bank apps are. So I think there is opportunity. I don't think it needs to come at the expense of anyone. In a lot of ways, it can be benefiting, like that company I mentioned earlier that is pivoted and taking advantage of the opportunity to help fill a void in the market where the grocery delivery to consumers can't keep up with demand. They filled that void, used their infrastructure, and it was good for their business. So I think you're going to see a lot of this going forward. And in most cases, taking advantage of the opportunity is not going to be at the expense of anyone. And in a lot of cases, like if you can hire good people, that maybe would have been a lot harder to find those people 6 months ago, because they were working at a great company like Airbnb. That's good for everybody, right? You get good talent, they get employed at a good company, and everybody wins. So I think you're going to see more of that than not. I think the tough part, like Rick's talking about, is when should you be offensive versus defensive? And for companies like where Guru is, where you have good funding, you have a good business, you're in growth mode, but you're also trying to be conscious of, making sure you protect the business in the long run if this thing extends much longer, much deeper than we hope it does, and that you're prepared for it. And how do you balance that? Because these do present opportunities where being offensive minded can be a springboard to, some of the best companies in the world and the biggest companies in the world happen during these times. And how do you balance being offense and defense is and there's no right answer. I think that's actually the trickiest part of all this is, do you go out and start hiring some of these folks and, and not pull back like everybody else is? Do you not stop hiring altogether like most companies are, or start cutting? And can you be offensive minded and still be smart with the business over the long run? Is the tricky one.
Yeah, definitely. Mike, not Mike, Rakia or Rick, anything you want to add there?
I just wanted to chime in because I saw someone ask a question around like hiring at this time. And I think, Mike, you sort of alluded to or started to answer that question. One of the things that we've done, we were on the track to open an entire LA office and staff that office, with folks in LA, and then folks being remote in New York. So a lot of the work that we had been doing was really in this virtual vertical, and which is sort of, where a lot of our work is living right now. But what we've done is we've stopped hiring full-time, and I'm just, speaking transparently, stopped hiring full-time people, cut that off. But we have brought on a lot more consultants and thought partners at this time. So one of the things that we wanted to do, again, from a service side, understanding what other people are going through, if we see someone that has a very strong expertise or an authoritative voice in an area that can be complementary to our business, and there's someone that has sort of put, on Twitter, I'm sort of living in these Twitter threads where folks are like, oh, I just got laid off, or I've been furloughed and I have some time, I immediately will reach out to people and bring them in for, like a think tank to understand what their capabilities and sort of value points are. And in turn, instead of hiring, some of those full-time people that I was looking at back in December and in January, I brought on 10 more consultants to work with us to add value, to offer expertise, and to sort of keep those folks going as well. So it has created an atmosphere of value and thought partnership reciprocity amongst some of our, in our community of, creators, folks in the advertising space, lots of folks in the marketing space, a lot of writers who are not working. We're bringing them in to say, hey, can you copy edit a few things for us? So I think we've sort of rethought this, and now for us, it's when we do get on the other side of this, how are we going to structure, or how am I going to structure Skai Blue Media in a way that we are encompassing all landscapes and looking at what that risk is. So if something does happen and I want to open an office in a city, I'm not going to sort of rest my laurels on being in that city physically, but just looking at what I'm offering in that city. So I think our approach and our just the structure of our business has been changing and will change from this point forward.
Great, thank you. So we have a couple great questions coming in from attendees. Rakia, you just referenced this. How has the pandemic affected hiring for your companies and other tech companies And do you see an emphasis on hiring the best person regardless of where that person is located? So that may be, your answer, of course, may be affected by if your hiring plans have changed, maybe Rick specifically. But what do you have to say about that, I suppose?
Yeah, we are definitely hiring for sure. We have definitely I think we'll probably hire slower than we were coming into the year. I was alluding to that a little bit more. I think I think the trade-off, like a more specific example of the trade-off I was mentioning was like in a world where we're looking at leading indicators around count sign up, churn signals, new business growth. It might mean that a role that we would have hired, now we're hiring in a quarter from now because we're being a little bit more, we're relying on those metrics to trigger the hiring. I mean, like that's just sort of like responsible business planning. So like, I don't think like anything I'm saying is like earth shattering, but I think when you raise around and you think about a hiring plan, we will and have and will continue to some extent, hire in certain areas like engineering where you're hiring because of product horizons you're planning for that might be a year away. We're being a lot more thoughtful about that in response to this. But yeah, we are still hiring. I think your geography point is a great one. Yeah, we are. We both for Boomi, the company I started before Guru, and now had the kind of Guru East and Guru West strategy of Philadelphia and San Francisco, and that's worked really well for us. And so certainly we recruit in those two geographies, but we actually we hired a VP of engineering in the fall, and one of the things that our talent strategy has evolved to then was hiring folks kind of regardless of geography. And so we kind of got a taste for that kind of like ending last year. And I think now have like evolved our thinking already. And like, I think there's a world where more and more of our roles, we can do that. I don't think we like have answers, but I think we definitely, certainly within engineering are looking in like we're becoming a lot more geography agnostic as a result for sure.
Great, thanks. And a question for you, Mike, specifically, in addition to you being invited to speak to Towson University students, let me find this question. All right, so what are the ways that you are changing how you're assisting the organizations that you work with from a financial management / investors perspective?
Yeah, I was just writing a response to that person, so I'll just say it. The biggest one is how much to raise and when to raise. And do we raise, and more so now than ever, and I think the answer is more different for any company given their situation than it has been in the past. I think in the past you could sort of provide general guidelines of if you're earlier stage and you're seeing this kind of growth, what do we do? And if you're later stage, you got to get to these levels or whatever. And now it's more case by case, but I think it's not always intuitive, and I think it's harder to know because it goes back to that uncertainty. And you're seeing more companies that weren't planning to raise just to get some extra cash. And you're seeing, bigger ones later stage, they're publicizing it where they're like, hey, we just brought more money in because we can, and we don't know how long this thing's going to last, and we weren't going to. So they're making those trade-offs. But I've also seen good companies try to go out and raise B rounds or C rounds, and not get the kind of reception that they would have, 3 months ago with the exact same business 4 months ago, and they're turning to inside rounds or they're turning to bridge rounds because there isn't the reception in the market isn't there the way they want, and they'd rather delay it. Now that's a little bit of a risk, obviously. Earlier stage, I think, particularly like seed stage, spending a lot of time with founders that are really early, and there I'd say it's today feels to me like a little bit more like business as usual. And part of that may be that seed stage has such a long time horizon anyway. Those investors are more comfortable with this environment. Like, you know what, I'm going to give you some money. It gives you a runway for 24 months. You put your head down and go build your product. And the time horizon is so long that they're willing to take more risk. And so there are cases where I've been talking to founders who we're not planning to go out. And if I look at what they're doing, I'm working with, a handful of other companies that I've seen them close rounds. I'm saying, actually, now may be a good time to go raise because a lot of companies have pulled back. And I said this before, it may actually be easier to stand out now because the deal pipelines have dried up so much. And the reality is there's a ton of capital out there. Like, the capital didn't go away. they're sitting on it, and their LPs pay them to invest it. They don't pay them to sit on it. It's not a money market account. And you see these funds where Oak has a relatively new $800 million fund, and Kleiner just raised, and Insight has billions of dollars, and Index has billions of dollars. There is a ton of capital out there. And I think the earlier you go, I think there's a trend where it's easier to sort of just keep doing what you're doing. And if you're going to go raise and it's a good time to raise, go do it. But I think the broader question of that's where I'm spending most of my time is there's just a lot of confusion. And I was going to go raise, should I do it? My runway is only this long, and more. That's always a question. I mean, that people, founders are thinking about, but I think more so than now, there's just a lot of confusion. And I'm able to help them just because I have I have one foot on the venture side now where I can give that perspective and spend a lot of time thinking about, do you pause, do you raise more, do you expand the round, do you delay it, kind of questions.
Thanks, Mike. Yeah, we have about max 5 minutes. I've been told that we should cut off for sure at 9:50, but we did start a little late. So I want to get one more question in specifically for you, Rakia, and then one quick summary question for everybody. Rakia, this is a question from an attendee. If you had to summarize in a few words, what is your phased framework, i.e. respond, recover, rebuild, etc., for brand communications through the COVID crisis?
So I would say from a crisis standpoint, know that everything is urgent. In working in crisis communications, if someone calls you or reaches out to you, know that it is urgent during this time. So you do have to respond quickly. Also know that no one has the right answer. If anyone tells you I have a plan and I have a 3-month plan or a 2-month plan, they're lying, because that is not true. Futurists and people in the world of media and planning typically like to plan 1, 2, 3, 6 months in advance. All of us are operating off of a 5-day sprint right now, week to week. And sometimes in most instances, it's day to day. What we did yesterday will probably change today. I'm not seeing the trend in our space from a minute to minute standpoint, but definitely a 5-day sprint. From the triage space and the recovery building space, it is paying attention to macro trends, and for some small businesses, it's paying attention to microeconomic trends. And I think you have to look at sort of what kind of value. Again, I go back to this sort of theory of acts over ads. A lot of folks are monetizing off of the moment, and what we want to make sure. I saw a good maybe a cartoon. Someone sent an email over to me the other day, and it said, after all of this, the notion is going to be, how did they help.com? Like, how did you help? How's your business helping? I mean, someone called you out, Mike, and said Venmo is helping my business through this time in order to be able to exchange cash. But so I think a lot of folks in the recovery standpoint have to understand, how did you help.com? How's your business helping? And then from the recovery standpoint, and then more along the lines of the future piece, it is looking at what worked in these past 6 weeks or past 8 weeks. Take those moments of what a small assessment will look like. We just looked at like Q1 numbers for us. We're not using those Q1 numbers to predict what's going to happen in Q2. We're looking at things from a 6 or 8 week lens to help us to predict what is happening next. And I will say, in my last meeting, I was saying, let's look at the last 4 weeks to evaluate things. So look at things in smaller increments. Don't take a futurist mindset where it's like, I have all the time in the world to really, really plan. Operate on shorter sprints.
Great, thank you so much. And thank you to all our panelists. We have 2 minutes. I'm going to squeeze in a question that'll hopefully be easy to answer. Tweet length responses. What is a piece of advice that you have for other entrepreneurs or business leaders trying to lead growth companies right now? Rick, you're not muted, so you can go first.
Okay. Yeah, I think there's. I'm an optimist, so I'll have a positive rooted response. But I think that there are a lot of opportunities for founders to be looking at permanent changes. What will be different in this world, and how can I create unique and different value? And I think there's some obvious aspect to that statement, but I think it's a good use of your headspace to be thinking that way, because I think it does get your brain working in more of a growth mindset. I was chatting with Chris about this last week. Like, I think it's rewiring your brain to take something that hits you really hard and in many ways has a lot of tragedy around it, and that you don't want to ignore those feelings, but I think also go, well, how will I take the opportunity to learn from this and do something that will be different, better, valuable down the road.
Thanks.
I think that was longer than tweet length, though.
This is a tweet thread. It's all right.
It was a thread, sorry.
Yeah.
We love a good thread.
Focus. What you got to get rid of the noise, and if you're working on 5 things, what are the top 1 or 2, and making sure that you're focused on the things that are going to allow you to be offensive and growth minded, but sustain the business for a longer term period of uncertainty. I'm an optimist too, so I like Rick, I want the offensive piece in there, but I think you can be smart about it, and that may mean you trim down some of the new initiatives and really focus on the ones that you have, and instead of doing 3 new things, do 1, and take the teams that we're working on those other 2 and focus deeper on the core business. So maybe sort of shifting priorities and delaying some new initiatives and things like that. I think that is a key is focus.
Thanks. And Rakia, tweet length or brief thread advice?
I feel like I did that.
True.
Ask over ads. And for the small businesses, I do want to say this, and I'm a thread person. I can't do like just one tweet, but I would say for the small businesses, one thing that you should do is, instead of going out trying to get new things, maintain what you have right now. So like sort of stop this bleeding that's going on within small businesses. Maintain what you have right now. Look at how you can add absolute value. Look at how you're going to add value after this, and do not monetize off of this moment.
Thank you. Thank you so much to all of our panelists. We've been speaking with Mike Vaughan, Rick Nucci, and Rakia Reynolds. We are going to close out this panel now, but attendees, please stick around for your incredible next session. We'll be hearing from a couple different panelists moderated by technically affiliate reporter Paige Gross, talking about how to be responsive to your workforce during a crisis. Thank you.
Thanks, Rick. Thanks, Mike. Thanks, Julie.
Thanks, guys.
Thanks, Julie.
Thank you.